I'll just read the introduction of this session before I call the moderator and the panelists onto the stage. Balancing between sustainability of customer and financial institutions, Financial Inclusion 2.0. In the last 8 years, with the launch of Jan Dhan Yojana in 2014, demonetization in 2016 and 17, and the pandemic in 2020-21, access to banking and digital financial services has to be taken a huge leap. However, the debt levels of low income and poor and micro enterprises, particularly post the pandemic, have significantly increased without having adequate cover from savings and insurance to provide them with required financial resilience. With digital technology being the game changer for delivery of financial services, Financial Inclusion 2.0 will be driven by digital innovations, which necessitates significant investments in the demand side for real gains. The session, hosted in partnership with CRISIL Foundation, will focus on absorption, demand-side challenges, and review current models for undertaking customer capacity building at scale, including RBI Center for Financial Literacy, that's CFL initiative, with required enabling safeguards for customer protection as well as grievances redressal. Our moderator, ladies and gentlemen, today for this session is Mr. Prabhat Lab, CEO of Grameen Foundation India. Let's give him a warm round of applause as he comes to the stage. Our speakers are, and please keep the applause going, even though you've had lunch, but we want to have a lot of energy in the hall. A round of applause goes to Mr. Amit Kapoor, founder and CEO of One Stack, Amrita Kapoor, Chief Operating Officer of Swadhar FinAccess. A round of applause goes to her. Neeraj Maheshwari, CEO and co-founder of M Insure. A warm round of applause to him. Umanath Mishra, Director of CRISIL Foundation. A warm round of applause goes to him. So, ladies and gentlemen, we are starting at 1:45, and the session duration, we'll try to do it for 2:45 watts, 1 hour, and I shall be back with you in 1 hour as well. Please keep your mobile telephones and all electronic gadgets on silent mode, and we hand you over to the session moderator, Mr. Prabhat Lab. Over to you, sir.
Thank you, and good afternoon, everyone, and a warm welcome to this post-lunch session. I know that, of course, people are still having lunch, and of course, one of the important purposes why we come here is to have networking. So networking, in full flow. Even I was kind of doing a lot of that, extremely helpful. And really thank Access for creating this platform where we can network. But I'm also thanking CRISIL Foundation for helping curate this session, and so Umanaji especially, thanks to CRISIL for bringing this session forward. I'm privileged to have this fantastic panel here, which is actually very diverse, as you would discover, to talk about this whole theme of Financial Inclusion 2.0. And so when this session write-up came up to me, my first question was that, okay, we are talking about Financial Inclusion 2.0. Why do we need a 2.0? And if we are talking about 2.0, there must be something in 1.0 which needs to be improved upon, or perhaps may not have gone so well. Or at least to be clear, how we are looking at Financial Inclusion 2.0 to be different from 1.0, or what it aims to accomplish, or how it kind of operates. So that's my kind of starting, question to all the panelists, and I would ask, each of them to take, maybe a couple of minutes to talk about, when we say Financial Inclusion 2.0, how do you envision that future? I think that may be a good starting point. And I don't know, Umanath, you'd like to start first, and then and it need not be in that order. I mean, whoever wants to go after Umanath, I'll not use my moderator kind of direction to kind of direct that. So I'll keep it free flowing. Thank you, Umanath.
Yeah, thank you, Prabhat. Rightly said. Okay. So I would say the financial inclusion 1.0, basically the learning. So I think the learning and the experience has been echoing all around for this last 2 days of conference about the achievements that we have made in financial inclusion 1.0. So I think I would say the entire space of financial inclusion has been the landscape has been very colorful and evolving, because how I see it is like last 40, 50 years of effort. And definitely the last decade has been quite a watershed moments that we had in terms of the coming up UPI, the Jandhan, the Jam Trinity, and upcoming of the different players in the financial sector. The supply side also, the experiments that have happened in terms of this. We have now small finance bank, we have now payment banks, and now neo banks. So all supply side policy enablers. So these are not a thing of a day or two. It takes a time. So but definitely after this, what next? So how I look at it is like scaling Mount Everest, and we are at the base camp. So it's like 60% of the journey that we have covered, and now the 40%, and that will take us to where we want to reach. So now, how the my idea or how I look at the or envision the financial inclusion 2.0, or the things that I would like to see in this, is that from the demand side perspective, because we see that lot of things has happened on financial inclusion one, but still, if you look at a couple of reports, I mean that was highlighted in a lot of panel discussions also, the Findex. I would bring in the concept from the BRIC digital financial inclusion report also, and of course the IFI reports. So the last mile delivery, the touch points, everything is there, but still absorption. COVID time in terms of absorption of digital services may be an aberration. We can, because we see a large number, from something from 20% to 50% happening may be an aberration because of some circumstantial thing. But how to sustain this? So for sustaining this, we have to focus on those aspects of demand side where we see that we still see lags in terms of the capacity, the capabilities, the ability, in terms of absorbing the technological advancement that is happening. In terms of also one point that has been highlighted was the surplus income. So for example, the ability to generate income for themselves. So these are also important points. And also one very important point that I would like to highlight is the active and passive income on the last mile, because we see that there most of income are hyperactive income. These are not passive income. Don't have enough surpluses to rely during the time of shocks. So whatever financial services or financial inclusion, the vision that we are creating definitely should have these pictures in our mind, that how they are progressing, the last mile progressing on the wealth formation chart. So with this thought, with this initial thought, I would let the otherwise, it's a one-sided that will happen. So I'll let because they are experienced panelists, so they will also come up with their views. Thank you, Prabhat.
Thank you, Manath. I really like the analogy of the Mount Everest, climbing the Mount Everest. And often when we are at the base camp, people don't imagine how much work is needed to get to the base camp because it is actually at 18,000 feet. So wonderful. Thanks for that analogy. Let's go next. Neeraj?
So I think 1.0, I would say it did achieve objective, like covering opening more than 50 crore bank accounts, right? Covering 55% being women, enabling branches, opening network. It did achieve certain objectives, right? Did it achieve all the objective? Like we have to again look for an answer. One. The second, the 1.0 was more of a effort oriented, and now we need to focus on the result oriented stuff, right? So financial inclusion, we all know we have four pillars: credits, savings, insurance, and remittances. Savings we did, we opened a couple of accounts. How many are being active? Again, we are looking for an answer, but still they've got a 1 lakh crore balance in those accounts. So I think definitely we have achieved something. Uh, Second, moving to savings, yes. So that's numbers what we're talking about. Third is insurance. Insurance saw a decline in the number of, especially people really penetration going down. You know, and another important was I also count health is part of insurance as well. Is We have seen I think the one of the poorest penetration, where the global average for even the in last 10 years, the global average for the density for the insurance premium is increased from 600 to 1,000 euros. India has increased from $60 to $78. So it's a huge gap, right? So that's something I think that's one. I would also say that more and more inclusive approach in the 2.0, we need to have it. One of the point which we were discussing as well, how we can connect all the dots, right? Building more and more partnerships. Today, most of the players are being siloed. I'm not saying the regulators, but the players, right? Regulator is trying to connect through the sandbox regulations, through the penetration. There's a lot of pressure, from the insurance point of view, there's a lot of pressure on increasing the penetration. But are the banking partners aligned to it? Are the new age fintech are aligned to it? Are the new age bankers aligned to it? So we need to look at it. And the most important is what we really emphasize in the 1.0 was high touch, right? So open more accounts, reach out to more people, put more branches, and all those things. The 2.0 technology is going to be enabler. It's going to increase the reach. It's going to increase the utilization, and that's what going to be focused on. Thank you.
Thank you, Neeraj. I really like your focus on effort versus result. I think, yeah, I mean, maybe the number of people who finally climb the Everest and reach the top is maybe, 1/10 of the people who start the journey. So really, thanks for that. And people don't remember the names of people who started the journey. People remember the names of those who climbed and finished it. So thank you.
Uh, so I'll go next, and thank you, Prabhat, and thank you, Access. Thank you, Radhika. What a wonderful summit. Great to be here. Real pleasure. Um, great summit, and this panel is really very timely and important because financial inclusion 2.0 is very, very relevant, and this is no better reflected than in our financial inclusion index, which was published in March 21. It was 53.9 and went up to 56.4 in March 2022. And if we look at the three sub indices of access, usage, and capacity, really shows that we have done wonderfully well. The regulator and the Reserve Bank and our government has opened access. The sub indices stood at 73.3. So there was a huge introduction of products and digital financial services, and as Umanath pointed out, the JAM Trinity, and also the UPI, which covered the length, breadth, and the width of India. And vulnerable communities all over India were able to really make payments through the UPI, cashless payments, legitimate ones, irrespective of low literacy or the income levels or any social barriers, cultural barriers. The demand side is reflected by the sub indices of the financial inclusion index, which are usage and capacity. And usage stood at 43 and really highlights that a lot of the vulnerable communities were unable to really, adopt digital financial services, and also uptake of products, financial products and government schemes by them was not really up to the mark. So a lot of work needs to be done on that forefront. Uh, uh, Capacity highlights three dimensions: financial literacy, customer protection, and inequalities. And both usage and capacity really are the softer human aspects of the financial inclusion index. And the demand side needs to now step up to keep up with the wonderful supply, because while the world is looking at India to take away a lot of lessons on the phenomenal access that has been provided by the regulator and the government, the demand side needs to really be worked on, and our work at Swadhar is deeply embedded in the demand side. And we provide financial literacy as well as inclusion to remote areas in the states of Bihar, Madhya Pradesh, Jharkhand, and Maharashtra. We are a partner with the Reserve Bank in the CFL, the Center for Financial Literacy Initiative. It is a wonderful initiative by the regulator to really bring about multi-sector experts, and through collaboration really take financial literacy and inclusion to the last mile. And financial inclusion 2.0 will look at really servicing the customer, creating that customer protection, grievance redressal, and all softer issues so as to equip them to really take up products that are well suited to them for their life cycle needs, to protect them during emergencies, as in the pandemic that we saw, to save and to invest for a better future. And at Swadhar, we are preparing by studying our customer behavior, carrying out a lot of trust building in the villages that we go to, because trust is primary for them to trust in digitization, in the digital financial services, in the banking sector, in the financial institutions, and also trust in the financial products. Communities need to have trust so as to then learn. And that is a barrier that we look at removing in financial inclusion 2.0 phase. And after the trust building, a lot of literacy, a lot of studying of consumer behavior, we are going to adapt our modules, our content to really suit what the customers need in the various states, so that it is really need based and it really helps them to improve financial health and well-being. So that is what at Swadhar we look at financial 2.0 phase. Thank you, Prabhat.
Thank you, Amrita. Amit? I know you have some really interesting dimensions to talk about. So I don't think you are at a disadvantage because you're coming in, because there's really wonderful things we want to hear from you. Thank you.
Uh, no, actually, more than anybody else, Mr. Modi himself had said that last time Jandan was about taking banks to the villages. This year it's going to be about taking banking to the villages. And if you see the data, right, 380 million Indians actually bank with the long tail cooperative banks. And most people don't get this number wrong because there are actually 1 lakh cooperative banks in the country. And unfortunately, they lack in technology and infrastructure. So we at OneStack are giving them a mobile application which actually makes them perform all of these financial transactions. So on one aspect, there is, like I was just sharing with them, it's about not just taking horse to the water. We actually make sure he drinks it. So that's what we do. We give them the application so they can perform all the financial transactions which you and I would like to achieve in this financially inclusive objective. So yeah, let's hope so.
Thank you. Thanks for reminding that, beyond taking banks to the villages, we have to take banking to the villages. And, beyond banking, maybe, broader suite of financial services. And in fact, on this panel, we have, somebody like, say, Neeraj, who will talk about, experience in insurance, health tech, and, insure tech kind of space. So we'll have broader suite of things to talk about. But, a lot of emphasis on, of course, adoption is coming, and on digital is coming. Now, in this new digital world in which we exist, how do we kind of, prepare the customers for this digital life or digital journey? I think that will be my kind of, first question on which we can kind of look at. Because, we live in a country where literacy rates have gone up, but it is still not 100%. We have a huge cohort of people who are barely neo-literate, let's say. Access to smartphones is maybe around 45-50% people have smartphones. Other people have no phones or a feature phone or a kind of and then the issues around Amrita was talking about the trust issue, trust of the product, trust of the provider, all of those. So how do we kind of help the demand side embrace this new world of digital, where a lot of things get done digitally? Anyone who, Neeraj, you want to kind of take it up?
Yeah,
Because
it's my
you are
favorite
more,
topic, I would say.
more tech,
Right. So I'll tell you, first of all, I think we really kind of overdo digitization. Okay, what you need to digitize is, it's not the customer has to use the technology, first of all, right? The process could be tech driven. Your solution can be tech driven. Today, I just give you an example. When we started this company, M Swast, we are, we got into that. Oh, we really thought, like you said, mentioned, oh, 50% people have a smartphone. Wow, right? We will definitely, all of will come, they'll start using our solutions, they will come on the app, which never happened. Today, less than 10% of a customer do not even use application. And that's what, maybe we are in real Bharat. We are operating in Bharat, we are operating in rural in India. 70% of our customers are walk-in. We have 1400 e-clinics. 70% of these e-clinics are being operated at panchayat level, block level, tehsil level. They have a smartphone at home. They don't use it. That's all. So what we did is, and some of the thing is, PM Modi's envision taking banking to the rural is simply taking health also to the rural. We started setting up e-clinic. The patient can come, they interact the doctor over the app or the video call. They are enabled through technology. They receive the mobile SMS prescription on their feature phone and smartphone. So it doesn't, they have to be part of the smartphone, not necessary. Make them part of the technology process. However, just to emphasize, today we operate 1400 e-clinics. We do 10,000 plus daily consultations. We are talking about 2 lakh health records every month being generated. Across the country, we do not use single paper. We do not, in the company, be it e-clinic, we do not use any paper. And that's with digitization what we're talking about. Coming to the, I think one of the favorite topic of everyone's is how we create awareness, right, today. Yes, our e-clinics are the awareness points, but we also do a lot on the communication work on the mobile, right? We use SMS, and SMS success ratio doesn't work very well. You move to IVR, then you move to calling, then you move to the e-clinic, how they want to communicate. So, couple of things, this which I was talking about. So, technology, there's a lot of emphasis. We are a health tech company. I would love to talk about it. It should not be a hurdle. It should be a solution. It should be a bridge to reach the customer to enable the solution.
Thank you, Neeraj. It's good that you mentioned about multiple things that you have tried and moved on, moved on, moved on. So I think and of course from M Insure perspective, it's on the supply side, of course, and your business model being a B to B to C model, right? And we'll also hear later on from Amit, which is more of a B2B and of course, end customer. But before that, we'd actually like to hear from Umanath and later on from Amrita, actually, who are actually working with the end users. So how does this entire thing, these new modes of working work with them? How do you actually, build awareness, build trust, and help the customer move on that whole journey of what you call as customer journey of awareness, intent, and then adoption, action, and then continuous usage. So how do you kind of follow them up through on the entire journey? So Omanath, if you can take it up, and later on after that, Amrita. Thank you.
Yeah, so Prabhat, as we have talked about the infrastructure that we have created, the supply side, all the progresses that we have made. But I'll cite one example from the microfinance sector that we see while we are able to do the 100% disbursements, the cashless disbursement because of we have the bank accounts now, the Jandan, and we have now around 50 crore accounts that we have. So that has been easier. But if you look at the collection side, if we don't consider the transactions, the collections happening at the BC point, then this would be around 2 to 5%, which itself highlights the challenges at the demand side that exists, and where we need to put focus on in terms of the increasing the capacity for accepting these technological advancement that we are making. So I would say that definitely the efforts on the education part also has happened, because if you look at the national level, we are among the 35 countries where we now have the national financial inclusion strategy. The regulator has come up with a 5-year guidelines and very specific, on how to build the capabilities at last mile. And it's not just about the guidelines on the action side. Also, if you look at I would like to quote the example of RBI CFL program. It's one of the largest program, the financial literacy program, because earlier the debate was who will bail the cat. So now the regulator has taken it up in the right earnest that we are going to create physical setups. I think CRISIL itself has now up and running 429 centers and 180 more centers. So with this 600 plus centers and operating across 1800 blocks, which is not, it's a big numbers. So, and if you add to it the other initiatives which is happening at the same time, like the Saksham centers by NRLM, which are now they are envisaging the 7,500 centers. Considering the number of total blocks in India at 7,500, it's like on the not on the supply side, but on the demand side also, we are going to have a touch points, which will be providing these financial literacy programs. There are other partners like the Amrita side. There, Sudhar is also one of the big partner of RBI. So these things are happening simultaneously. So definitely these demand side capabilities are important, and efforts that also is happening. Now I think Amrit can also throw some light on how, as you were citing that example of that taking horse to the well and now the drinking. So, what are your efforts that you can highlight?
Yeah, so let's hear from Amrita, and then after
Yes.
that, yeah.
Thank you, Prabhat, and thank you, Umanath. Prabhat, it's a really wonderful question that you have asked, because this is what will create the sustainability in financial inclusion 2.2 between the supply and the demand sides. So, as Umanath also said, the national policy for financial inclusion and the national strategy for financial education have been beautifully amalgamated in the Center for Financial Literacy project introduced by the Reserve Bank of India, and Priscilla and Swadhara, proud partners of the Reserve Bank. And these are centers for hope and action, because they catalyze financial inclusion in the most far-flung remote areas all over India. And the regulator has really done a wonderful job of outlining remote blocks which were really untouched. And we are at Swadhar, we are working in Madhya Pradesh, Bihar, Jharkhand, in tribal and untouched areas where there's a huge lack of literacy, very low incomes. In fact, there are also hunger and sanitation issues. So these centers really provide a lot of hope. And the first step is, introducing financial literacy to them in a very easy, user-friendly method. So we recruit locally. Our content has been developed and we deliver this in local languages. First step is to create empathy and trust. I cannot emphasize that enough with the community. We do a lot of networking with the panchayat, with village influencers, with the post office, with the police station, to really be impactful and effective in on the field. To take it to the customer for this end mile impact. And after that, the trainers do a lot of mobilization and mass media campaign, because awareness about the program, about the regulator, about the government schemes, about Swadhar, about the benefits of uptake of products, and the benefits and advantages of digital financial services, and how other community members in different states have benefited, is what we educate communities that we are present in, going forward. And the demand side can totally be developed by really addressing softer issues, and really understanding what their issues are, and then recommending to them products such as the Jeevan Jyoti Yojana, the Prime Minister's Jeevan Jyoti Fund, the Suraksha Bima Yojana, Sukanya Samriddhi Yojana, the APY Atal Pension Fund. All of these have to be explained to them, and how these will really benefit them. So awareness is the first step, and inclusion is second. Digital financial services have been adopted, and vulnerable communities are very excited to use these. The smartphone is not available in all the areas we are in. This is a barrier. So besides network issues, availability of mobiles, there are also social norms, cultural norms, social biases that exist. There are a lot of barriers. We have to overcome these, and we do overcome these by studying consumer behaviors better. We are conducting a lot of experiments as to what ways and processes of financial literacy will be more effective to encourage them to take up these products and want to be financially included. So going forward, human behavior will have to be addressed for the demand side to be really successful. So at Swadhar, we're looking at focusing on that. And back to you, Prabhat and Amit. Thank you.
Thank you, Amrita, for those wonderful points around dealing with human behaviors and biases and easy to use methods which are localized, trust building, empathy. So really, really important points when we talk about working with the demand side and making the demand going. In fact, I was going to kind of talk a little bit more on that aspect. I would like you to talk a little bit more about that aspect. How do we kind of deal with this behavioral aspects of human beings, right? We as human beings have several problems and challenges. Many economists working on, say, behavioral economics have studied this, like behavioral inertia, mental accounting problem, or things like how do we deal with nudges, they can be effective, how we carry our own inherent biases. So whenever we kind of want adoption to happen, it's important that we remove these barriers which come from our human behavioral aspects. So if anyone of you would like to kind of throw light on this, how you have taken these as part of your design principle, like in the private sector, and also in the tech sector, they have always paid a lot of attention, like in terms of design of applications, so that it's easy to use, it's kind of clutter free, it's clear, it's uh, so, and even the private sector, the marketing, communication, they always have place. But in this industry, are we really paying attention and including that in our design of how we design our financial education, marketing campaigns, which then removes the barriers, leads to adoption? Anyone who would
So
like to?
Prabhat,
Yes, Umana.
while a very good point and very pertinent, while we cannot do away with the role of technology in our life and all this entire financial inclusion process, but I would say I would cite example from the CRISIL CSR program, the My Pragati program, which has proved to be an example where human to human approach has worked really. Apart from definitely the spine of technology has been there, but human to human approach proved to be very good for the community in terms of the absorption of services. So here I would say the example that post covid there are cases which has happened where we create sakhis as the cadres. So these are very close to the communities. They understand the vibes of the community because they are from the community. So the trust level is there. So because of this high trust level and understanding, there were examples where because of COVID death happens, and there were these. Amrita was referring to the Jeevan Jyoti Yojana and Suraksha Yojana. So these schemes were available, but people were not aware about it. But now, since Sakhi were aware about these happenings and the linkages benefits, so they were immediately able to come into action and provide these services to them. They supported this. So this is because the close contact with them and understanding what is the spur of the moment, what is the requirement. So in fact, this has led to the viability. This has addressed the viability aspects for the cadres also, because since the community is able to have trust on these cadres, so they are able to approach them for any services that they require. Apart from that, from the behavioral aspects that you were raising, it has come up really well on a research work called Portfolio of the Poor, which has captured it really well, that in terms of the financial transactions and all, it's not easy to get the real insights. So there were a diary method that was applied where for the months, it's a kind of longitudinal study where you get into the life of the people where you're living, and then you get the insights that what kind of financial services they require, what kind of financial services they are already using. Probably they may not be using the jargons that we use, but they are already actually using that. So these are the the nudging aspect in this is will be definitely helpful if we build cadres, because they will be closer to the communities. And I think Amrita and can also throw some light on this.
Thank you,
Actually, on
Omana.
this question, please go ahead. But after that, maybe Amit and Neeraj may have some good perspective on this. Please, yeah.
I'll just keep this extremely brief. But Umanat specified, and I would just like to iterate one point, that when vulnerable communities become digitally, financially included, they also become included in all other socio-economic parameters such as health, family welfare, livelihoods, uh, you know, and health and sanitation, all of that. So behavioral aspects have to be studied, because from state to state they differ. So our content is different in Bihar. It has been adapted to the communities in Madhya Pradesh, and it is different in Jharkhand, different in Maharashtra. So we have to be very sensitive to the needs of the community and adapt and create literacy and awareness for those communities, along with the digitization as well. It has to be simple, it has to be user friendly, and we do have two apps as well, a Swadhar Sathi app and a Swadhar Dost app. The Swadhar Sathi app is a client facing app where we upload modules which can encourage vulnerable communities to really do self-paced learning. And the Swadhar Dost is a trainers app, field workers app, where we can really track how our trainers are training these communities in various states, and they upload client information and data, of course, with full customer protection on a daily basis. So we track that as well. And of course, my co-panelists, who are the technical experts, would throw light on how technology is going to be the key enabler in financial inclusion 2.0. Amit?
Sure. So again, two data sets over here, right? It's like classic. If you give a guy a fish, you will feed him today. But if you teach him how to fish, you will feed him for life, right? So I think somewhere this hand-holding is needed. The nudges are needed, but you have to kind of look at beyond it, right? The interesting part is, right, today you and I and they all use the same Facebook, same Instagram, same Amazon, same Netflix. It's the same. So the platform is the same, the technology is the same, but it's adopted at both the places, correct? It's unfortunate like that most of our financial products in the technology domain are largely by design to fail. Like today, you can order a 1 lakh rupee phone with 4 clicks, but if you try buying Jivan Suraksha, you cannot. You have to download a form to go to a center to apply to get a insurance, right? So it's interesting that you can buy something for 1 lakh, but for a 1 rupee insurance a day, you cannot do it, correct? And that's largely by design. So I do believe that if it has to be done, you have to feed him, to teach him, to take it to the next level. Otherwise, this rigmarole, we will keep doing it time and again, and we'll have financial inclusion 3.0 also saying that what did we miss?
I
Neeraj?
think on the behavioral science or behavioral pattern, what you need to really do is learn from their behavior, right? And this is what you need to do in what we have today for our customer health solutions. Are we the same solution which we had on day one? No, right? So what you need to focus is on a need-based solution. How the customer is responding to the solution which you're offering, and then you customize your approach or the customized solution based on what the need they have. As I told you, we did not think of building e-clinics. We did not. It's because we know the customer wants to go and have a touch and feel experience. They want to visit someone, they want to interact with someone, though the doctor will take the final consultation. But that's something which we learned, and we start building. And today, when we had at one point, we were receiving all the consultations from the on the telemedicine, on the doctor consultation over the call. Today, 80% of our consultations happens at a e-clinic. There's a huge behavior change, and that's not something we enabled it. That's something we saw the demand from them, and we created the solutions accordingly, right? Similarly, right? So behavior, when you're talking about science, the one of the very important aspect you learn from those data points, right? So today we generate about, let's say, we do about 30 lakhs consultations in a year. Today for the doctors, it's also on the internal, kind of product we are improving is saving the biggest cost to us is the doctor, right? So if we can save the doctor's cost, how we can save the doctor cost is how quickly we can help them generating the prescription, right? So when they enter let's say, any particular disease, they have a drop down of medicines, and there's a predictive analysis will work and give them the quick solution. So that's another thing we have. Similarly, right? How quickly you can use the technology at the touch points where the customer is able to use himself or herself, or you are able to help them. But it's how you need to work around those solutions. Give them the final product.
Thanks, Neeraj, especially because you work in health tech and insure tech, and we know that from the customers' resilience and resilience perspective and overall financial health perspective, I think risk coverage is one of the most important thing, and we also know that it's one of the most difficult products to sell, insurance. So, any insights or ideas that you have done which kind of shows that okay, it's possible, it's difficult but it's possible provided we do it right. So some examples on that, on uptake and demand.
Right, right, Prabhat. See, so one of the biggest challenge for us, and which I think the fellow panelists may or may not agree. So India is divided into two parts. Very frankly, when you sell insurance or you sell any other kind of a health tech or any other solutions, right? If you're selling it to 30 crore population, when I say 30 crore population, typically the crore population will live in urban and semi-urban who use the Instagram, Facebook, or anything on a daily basis. But then you have a customer, especially that. So for us, okay, initially also I just give you a very different mindset. We used to think the men will buy a health product for their family. We were absolutely wrong. If you give out any health product to the male family member, they will never able to think about it, even how to use the product. Trust me, 70% of our customer are women. Even for their husband, they do the consultations. Even for their parents, they do the consultation. Even for their in-laws, they do the consultations. So the kind of solution we have seen, then how connected we initially we are communicating to all the male members very frankly, and okay, they are going to be the target audience. We were absolutely wrong. Then we need to change the whole message to the women customers, and now that's an important aspect which come in how you communicate them, right? Now for the 365 rupees product, I cannot go to their village, I cannot travel to their location. How do I connect it? And today there is on the one side I can be a banker, so no criticism to bankers, but I can send a message, daily message to my all customers, 100,000 customers, and I'm done my job, right? Whether they've read it or not read it, it's their problem. What I did was, how can I use the other medium of communication? And that's where we started using IVR. Today, success rate of SMS among our customer base is about 10%, where IVR is about 40%. They're able to listen 90 seconds, 20-second IVR words, and they're able to, and then they connect to the call center. So again, the contactability is a must, but how you first level of communication, you have a limited amount of money, how you spend that money, and that's where the right medium of channels, right medium of media, you need to use to reach out to your customer as well.
Thank you. Amit, would you like to kind of address on this or? Okay. All right. Fine. Thanks. So one next topic that I wanted to touch upon was with regard to one of the biggest barriers to adoption is the fear, the concern, anxiety, lack of trust, and in fact, Amrita was talking about that. So how do you make sure that that trust is built and retained, and trust doesn't get broken? For which you need to put in place safeguarding, you need to put in place grievance redressal, because without that it's very difficult to create trust and hence build demand. So I mean, how the industry is kind of doing it, in terms of say providers, how they are approaching that aspect, and in terms of organizations which are working on say customer education, so how this aspect is being taken care of.
So this is actually not just rural, right? It's an urban issue as well. For some reason, we consciously keep going to the rural market, but we sitting over here also have trust issues, right? Today, if a financial product is sold only on by a third-party service provider, you may like it, you may not like it. But if it is sold by a banker, chances are you will give him a good year. So that is what we have done, because at the end of the day, trust is where the bank is, money is where the bank is, correct? And only somebody whom you trust you leave your money with, right? So because of that, we are actually cross-selling all financial products and services through our banks and our cooperative credit societies. So they can walk into any of the credit societies or log on to the application and buy any financial service product. For them, the first big issue of whether to I buy from him or her is already addressed, because they trust them, because that's where the money is, that's where they go every time. So that's how we have overcome this trust barrier to take the financial products to these long tail.
This one actually, I also have a kind of follow up on it, which is if we look at also the trend whereby a lot of people are saying that in future uh, banking may actually move to neo banks. So people may not even need to kind of know who the bank is behind the products and services they are availing. And what you're saying is actually opposite of that, where people are seeing who is the bank that from whom I'm availing a service, but there is a kind of platform that is making it happen. So any kind of comment on this aspect?
Actually, Prabhas, the statement which you're looking at is banking is necessary, banks are not necessary. So the challenge which everybody is saying is that you don't really need to invest so much in physical touch points and physical destinations, correct? Your big branches, your ATMs, your networks, and those, correct? Banking is necessary by default, by design. Whether we like it or not, in India, fintechs, every fintech is an umbilical cord to a bank. No fintech can work without a bank, correct? No other financial service can work without a bank. We will, and regulators very clear, they're never going to let this happen. That's not only in India, even if you see globally as well. This whole phenomena of the whole neobank standalone has not been so successful, correct? Because at the end of the day, if it comes from a bank, they are able to consume it, they are able to adopt it. At the end, what is it that you need? You need the interface, and that's what I'm talking about today. Why is it that nobody teaches you how to use Amazon, nobody teaches you how to use Netflix, WhatsApp, everybody's used it, Google Pay, all the masses have adopted. Why? It was an experience layer. So that is what we did. I did not want to become a neobank myself. I'm saying I'm making you, I'm giving you the same user UX experience so that you can engage and retain your customer.
Thanks, Amit. So going back to that, aspect around, consumer protection, anyone would like to kind of come back to that? Whoever is okay.
Yes, I'm happy to take that
Okay.
question because in Financial 2.0, and especially for this year, our main theme is, reinventing our whole content around customer behaviors, customer protection, and grievance redressal, so that uptake of financial products would be, easier for the clients, as well as adoption of digital financial services. So for customer protection, how we go about it, and as Umanath has also already spoken about, our methodologies in the Center for Financial Literacy project, we there is a Satar cap by the RBI, and that is for customer protection. We educate our customers on customer privacy, data privacy, inform them and make them aware to how to use the ATM, to keep their cards secure, to keep their pins private. These are small nuances but extremely critical for them to ensure their protection. So we really go into minor details when our trainers take them to the ATM to explain how to use the ATM, and also how to protect themselves against fraud. A lot of our clients, the vulnerable communities in all the states of our operation, have been subjected to and suffered fraud and been cheated. So, once bitten, twice shy. So we have to arrest that barrier first, and through persistence and consistent training, and taking them to the banks, helping them file complaints, addressing their grievance redressals. We connect them. We are the bridge. Our trainers are the bridge. We support and facilitate their complaints to be, filed and solved. So a lot of hand holding is what our trainers do, and that is a huge, work for us in 2.0 model. And we are designing to our content to service them better for customer protection and grievance redressal. And Umanath would also like to share his methodology.
Yeah, so just would like to add to what Amrita said. So we see the grievance and the customer protection. These are the two aspects. So on the customer, the protection aspect, it is because the fraudulent practices. There are lot many schemes, the cheat fund and other many things. Many people visit the rural areas and they ask the villagers to invest, and then they take away the money. These are many cases that we have heard of. So that is one aspect of it. Other is the grievance redressal on accessing the financial product and services. So there is RBI ombudsman. The processes is well defined. So in terms of the financial services, the supply side institutions also, they have their own mechanism to address the grievance side. But again, to these processes and systems has been created. But again, to get to a level where these last mile population are actually using this, that also requires the capacity building. And there the role of the CFLs or the touch points that comes into picture, because this requires consistent effort. This requires the hand holding support, where you need to teach them how they are actually able to get use of these ombudsman services and the other mechanisms. So the role of financial capability again comes here, and which is a kind of consistent effort.
And Prabhat, you highlighted one of the very important aspects is the trust. How to win a customer trust? We work on a aspect. One is the one is that we are a B2B2C company. On a B2B2C side, we take care of the customer interest by using the data protection, by using the data privacy, using end-to-end encryption, everything. Okay, that works on it. Now, how do we work on the customer trust, right? How we win their trust? Now, customer buying an Apple iPhone, a customer paying for a 365 rupees, there is no difference from the customer point of view. They expect the same sort of service. The expectations are same, that they bought the service from you, a product from you, and they expect you to deliver. Now, how do you deliver? The one very important aspect, whether the customer has paid 365 or bought an iPhone, they have to be heard. If they face the problem, Amrita and all of you have emphasized on, building a right customer redressal mechanism, giving them right touch point, they should be heard, everything. So all those are very important aspects which you have to pitch in, which you have to include when you're building any customer solution process. Another aspect I talk about it, and I've been in insurance for about 15 years, and I would like to criticize insurance industry for that. Today, all the insurance industry, they have a micro insurance solution. Today, none of the insurance company, before we enter into this segment, had a customized call center for a micro insurance customer. Till today, no insurance company has got a separate insurance company has got a customized call center for micro insurance customer. They also ping. They also expect somebody to call at the time claim when they're going to hospital, they're going to facing any problem with their. So that's what we built it. We build a customized call center. For today, we settle about 3,000 claims every month. We help them getting their claim settled. We have a dedicated call center for the people who are paying premium 150 rupees per annum. And that's what the uniquely we have differentiated as well. So this is what I just want to touch upon. Thank you.
Thanks, Neeraj. I'm looking at watching. We have 10 more minutes. So if you have any questions, please, think and ask your questions. And while you are kind of thinking of question, just one last question I'm posing to my panelists, which is there are two views about customer centricity. One view is that customers should have choices, and they should be in a position to decide what works best to them, and then left to for them. And there's another viewpoint which says that customers may not always know or behave what is in their best interest. And I think insurance is the classic example. And hence, a lot of times, you do bundle products or you do, different ways of selling. Any views on, pros and cons of either of these approaches? Anyone? This is an open question. We'll have some questions coming from the.
See, okay, insurance remain a push product, whether you agree it or not. And it's not in India, it's across the globe. So you have to, make effort to push. Yes, so bundle, see, I'll tell you some of the products which even, the regulator has said it, even for all the microfinance customer should be covered with the credit line. Why the regulator said it? They realize if you give an option to buy option to a customer to buy or not to buy, they will slightly do away. My 1,000 rupees cash is going, hard cash is going from my loan account. How can I let it go? But end of the day, regulator relies on product, and regulator said that no microfinance product should be sold without credit line. And that's something again. So it's both. You can criticize both the sides of the coin, but yeah.
Again, we have this very classic urban and rural divide. Most Indians are financially illiterate. We are very good at maths, but we are financially illiterate. Let's be very clear about it. Most of us are underinsured. Matlab, there's no two ways about it. How much of us are actually looking at investments? So whether are we literate enough or not, are we offering the right products by bundling it or not? Yes, there is a little bit of flavor to be given to the consumer, because let's face it, today's generation is not here to listen to you. So if you're going to be preachy in anything, they will just react. Today, they want the choice. Whether that is good, bad, ugly, they will take a call. So you can help them take the decision. But if you do a decision for them, chances are it will not work.
Thank you. Prabhat, I would like to add more from the way forward perspective to financial inclusion 2.0, and my request to co-panelists Neeraj and Amit, would be that these touch points are really playing a very important role. The CFLs or the agents in extending the financial inclusion services and the advising kind of services to the larger communities. So I think the financial inclusion should be seen from the perspective of a business case. So I think these agent model or can be seen from the perspective of where you see it as a market development efforts. So their education, their skills are also important, and also from the perspective of more collaboration and convergence into it. Because as we see that lot of initiatives are happening, as I was citing example from NRLM, the RBI, and all. So now, how to ensure that the points that we have created for extending financial services, they become viable points, or they become viable centers. So because we can, any program, be it a CSR program or government initiatives, cannot go, endless perennially to support such kind of initiative. So we need to have a mechanism where, like Neeraj's initiative, the health M-SWAS platform, if these can, provide alternative livelihood generation opportunities for these last mile agents. Similarly, the neo bank or digital banks can absorb them as agents. Definitely, there are BCs and other models that is happening. But apart from that, the larger ecosystem can play a role in ensuring that this go hand in hand. The financial literacy, the financial inclusion, these are again the two things. The financial literacy is more from the internal perspective, that where you develop capacities to take financial decisions. Financial education from the perspective of the absorption of product and services, understanding the risk and opportunities in those projects, those products. So these all aspects are important and should go hand in hand. And that's my way of looking at the financial game 2.0.
Thank you, Manat. So do we have any questions from the audience? Anyone for any of the panelists? There is? All right, please have a mic there. And please direct your question to a specific panelist if you have it. Otherwise, you can just, as you wish.
Yeah, hi, I'm Geetika. I've been researching in the financial inclusion space for the last 4 years. This summit is very enriching, as is the panel, I must say. So, what's been referred to as financial inclusion 1.0 in the panel essentially is focus on the supply side, developing infrastructure, especially banking. Right. So, as I'm hopeful because I hear from this panel that we need to think about the demand side, we need to think about a wider range of products. The buzz right now happens to be UPI, which, in my humble opinion, is more bank driven. It's about the bank account usage. While I agree, you can use your UPI to pay your insurance premiums, etc. I would want to pose to the panel. I think I'll let you choose who answers. How can we shift the demand side perspective to a larger set of products? Thank you.
So I think very important. I think initially when we started, and I highlighted one of the banking is not the only pillar, right? You have to include health, you have to include insurance, you have to include remittances. So each regulator, each of the player should take the should recognize this, that no. For example, insurance regulator, I would say, we're very aggressive right now. Being on health, the government digital health mission, they're being very aggressive. Yes, I completely agree. It can't be just banking. If you just do banking, then it'll become an over banking as well. So right, and you don't want to do that. So credit is one aspect which is growing. And initially there was a lot of focus on microfinance. Now we see MSME growing. Insurance, there are a lot of emphasis from the regulator side, multiple stakeholders side. I would similar say in pension, things are happening. So I would say yes, we are absolutely right. There's a right time to it, and we should have to emphasize it. And I'll request. I think we are sitting at one of the largest forum, and we raise it further with further regulators, new age regulators as well. How to improve the overall inclusion and not just the banking inclusion. Thank you.
Actually, just the single point to the lady. See, UPI as a product is not a banking product. Let me just get that perspective. It's a payments product, okay? And again, not in India. Globally, payments is the highest, stickiest financial transaction which happens at a consumer level, at a merchant level. It's also by nature, it is recurring, and hence there is that much vanity to it and that much affinity to it, correct? A lot of financial products are a very high touch at one point and then you forget it, like in insurance, once a year, done. that there's no relationship beyond it, right? Now most of the other services have been equally important and they are being focused upon. The unfortunate part is the awareness and the education, the way it is done. Each one of them does it in their own silos. And our regulation is super active and getting super active because of the technology innovations which have happened. Otherwise, most of our articulation were 1860 IRDI, 1980 RBI. So, there was a bit of a challenge over there because they are now being forced to revisit all of it because the modus operandi has changed. So, just a perspective, it's not banking, it is just that bank is the first go-to person for you for your financial need. And let me tell you this again is not India specific, global specific. Every bank cross sells, upsells all these financial services. They've always had it. It is just that some of these divisions became a little larger than life, some even bigger than a bank. Like a classic example, Bajaj Finance. The largest lender, even bigger than most of the banks put together, right? So it's just a vanilla, just a perspective.
Yes, please. Good question.
Hello, my name is Vidushi Tiwari. I work for an organization called CDOT. It's also in financial inclusion. So my question is basically to Mr. Neeraj, because just now he said that insurance is a push product. And, he said at the same time that women are basically, the target group now because you are going more with the women rather than the men. So women, if you say women, they are, associated with some kind of organization or it is a means of some kind of livelihood for them. So my question is to you, like insurance is really a post product for them to sell and they have to go back to the family as a whole. It's just not the women who are associated with this product to sell this product. They go back to the men, they need to convince to them like, why should they buy for it? So what is your take on this? Because they are in tremendous pressure to sell this product. And they are because, it's not in the rural or semi-rural areas. Even in the urban areas, you see insurance are like, the last kind of thing we buy for. So what kind of basically awareness you create at the community at large so that our women should not get pressurized to sell this product? you know and the secondly, once they buy it, they don't actually know how to access it. When times comes, they don't actually know how to approach that ways. So what is your take on that?
So yeah, I think you've got two questions. So one is when I talked about how we include women. So yes, when talked about how we include women in the whole, be it insurance, be it health, population or the covering the more women population, I was talking about the customer per se. Okay, how we can do it? One is so what? Yes, insurance come as a push product because nobody will get up and say, no, today I'm going to buy insurance, unless somebody come and tell you, right? So it's very specific. And that's how the awareness plays a very important role. Be it Crystal, what the work they're doing, Sodhar, work they're doing, the bankers or anyone, we need to put it as a product. It's a right product, right? So insurance, the moment I'm sure an agent calls you, you will not pick up the phone, right? So the things have to be changed toward looking at insurance. I completely agree with you on one point. There's a fault the way the products are designed. And I've worked in 15 years and I've also sold faulty products to the customer. And I can agree to it, right? Why? Because what we try to sell is the product which exists. Why don't you customize? Today, I told you in health, what we really thought and what we are doing today is completely different. So we need to work with the customer need. We are designing the solution, what customer. And today, I think one of us, we were discussing in the pre-panel, we go and sell that any term insurance product, life insurance product. And actually, I have paid term insurance product for almost 20 years now, and I actually feel for what I paid for, right? If you can plug a basic feature, let's say free health checkup every year for your family, or you get the return of premium, or you get some benefit that you've paid the premium. Similarly, on the health, do not just sell the health product. Give that some benefit to it. Today in US, any health product is not sold just purely as a health coverage. The primary health care, the doctor consultations are part of the product. So we can make more innovative product. We can customize more solution. That's how we can solve it. Why women? I was talking only about specific. We have seen they take the largely. So in India, like across the globe, I feel they say the caregivers are nurses, and doctors. The caregivers are women first. Let me tell you one thing. They are the caregivers. If they don't take care of the family, the nurses and doctor will not be in the youth, very frankly. And that's how we have strongly felt it. Today, the women, they consult for their family members. They even consult for the communities. They help each other. We work closely with the microfinance sector. And maybe that's why we have learned it. But I think that works everywhere. Thank you.
Thank you, Neeraj. We are running out of time, but before we wind up, I would like to give you a final opportunity. 30-second last comment, and we can start from that side. Okay. But two things actually I wanted to hear, briefly. Umanath, you had mentioned, in our earlier conversation about, corporate CSR angle, how that can kind of help or be of use in financial inclusion 2.0. Amit, you had mentioned something about a different Bharat or different, segmentation of Bharat. So briefly, just very, very short comments, final comments. Yeah, thank you.
So yeah, the final comment from my side would be that from corporate CSR angle, that design a project which matches to the national priorities, and then probably we have the next forums like social stock exchange. We can ideate the ideas and take it to scale. So that would be the summing up statement from me.
I think whatever we make it sustainable. It has to be self-sustainable. It has to be self-funded. Okay. It has to make money. If we are able to do that, then I think we'll be successful in 2.0. Yeah.
My closing remark would really be the subject of our annual report that was just published March end, humanizing digital financial access. So human and digital approach is critical to achieve the regulator's target of having one center for financial literacy in every district of the country servicing 3 blocks. By 2024, we have to achieve that. And a humanistic approach to digitization with technology being the key enabler is the way forward.
Mine won't end in 30 seconds. The big challenge which I said about when I spoke about the Bharat was, right. Unfortunately, whenever we speak about Bharat, we always speak about the 60-year-old farmer sitting in a village smoking BD. So far beyond, we can't see him. Correct. Bharat starts here. Correct. Faridabad is close by. Noida is close by. Correct. The minute you cross those borders, that's where Bharat starts. And there is no bank outside 30 kilometers of your metro cities. Correct. That is where the Bharat is. So unfortunately, we can't have this one size fit all strategy also for everybody. Correct. Today, your blue collar workers, the domestic help, where is she banking? SBI, HDFC? No, she's banking at a cooperative. She's banking and using the segments which these guys are talking about, correct? So there is Bharat every 100 kilometers in this country now. I think somewhere we need to start looking and revisiting the entire strategy with that angle and not just that last man standing.
Thank you so much. It's been a wonderful, wonderful to hear from all of you. And let's give a big round of applause to all our panelists. Really, really informative and insightful. So thank you for your time. Thank you.
Thank you so much. This was for a wonderful panel discussion. Thanks, Prabhat, for your moderation and also for stepping in to moderate for this session as a last-minute request from us. Thank you all for listening in. We have a short tea break, and after this, we'll assemble back here for the 2 plenary sessions that we have lined up for the conclusion of the conference. See you soon in this hall. Oh, yes. Okay. Yeah, special thanks also to the CRISIL Foundation team for working with us on developing the concept of this session. Please accept as a token of our appreciation, small mementos as you walk down from the stage.